Looking to invest in a business going gangbusters right now? Does a 4.2% yield in this low rate world sound good to you? Want to invest alongside Warren Buffett? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. Warren Buffett is arguably the greatest investor who's ever lived. He went from $0 to $100 billion in one lifetime purely through investing. Mic drop. Seriously though, Buffett only makes moves and allocates capital when he sees an opportunity. That's how he's built up one of the biggest fortunes of all time. And it looks like he's found one such opportunity. We know this because Berkshire Hathaway's 13F was just released. This filing goes over all of the buys and sells committed over the prior quarter within the $330 billion common stock portfolio managed by the legendary investor within his conglomerate, Berkshire Hathaway. And this filing shows one dividend growth stock in particular that got loaded up on again. Today, I want to tell you about the dividend growth stock that Warren Buffett just bought $1.3 billion worth of. Ready? Let's dig in. Berkshire Hathaway added to their sizable stake in Chevron Corporation, stock ticker CVX, in Q4 2021. Chevron is a multinational energy corporation with a market cap of $263 billion. Berkshire Hathaway's 13F shows us that they purchased slightly over 9.5 million shares in the energy giant. That purchase is worth about $1.3 billion at today's market pricing. Warren Buffett and his team must love this stock. Why do I say that? Well, they're loading up on it again. This buy actually follows up on a purchase of more than 5.5 million shares in the prior quarter, Q3 2021. So that's back-to-back quarters with large Chevron buys. Berkshire Hathaway's stake in Chevron is now valued at approximately $5.2 billion. That's right, we're talking big money, which shows us how much Buffett must like Chevron here. They now own approximately 38.2 million Chevron shares, so Berkshire Hathaway has made a serious capital commitment to this idea. And why wouldn't they? There is really not much to dislike about Chevron for dividend growth investors. And don't kid yourself, Buffett is a dividend growth investor in disguise. His affinity for high-quality dividend growth stocks is painfully obvious at this point, as most of his largest investments are precisely in the dividend growth investing space. In fact, I've rarely seen Buffett invest in a business that doesn't pay a growing dividend. Buffett knows how important a growing dividend is. A lengthy track record of a growing dividend shows us that a business has been managed consistently well for many years. After all, you can't write checks that can't be cashed, and you certainly can't write ever larger checks in that same fashion. It doesn't work. You have to produce the ever more cash flow to sustain ever larger dividends. And only great businesses, of course, can produce ever more cash flow. It's intuitive. Moreover, the expectation of a growing dividend forces management to be prudent with cash flow. It's hard to waste any resources when hungry shareholders have to be fed with ever larger piles of money. On this front, Chevron is great. Chevron has increased its dividend for 35 consecutive years, and the 10-year dividend growth rate is 5.6%. I know, not massive, but that's coming on top of the juicy 4.2% yield that the stock offers. So this is a great income play for yield-hungry investors. And since Chevron produced a record $21.1 billion in free cash flow last year and spent just $11.6 billion on dividends and repurchases, the dividend has plenty of room to head even higher. There's more than just yield here though. There's also performance. The stock is up by a monstrous 47% over the last year. Plus you get that fat dividend. Now, this is recent. The long-term picture is admittedly less rosy, but it hasn't been all Chevron's fault. The entire industry has repeatedly gotten beaten up by politicians, environmentalists, and even institutional investors for years. In addition, at times in the past, oil companies were their own worst enemies by funding too much exploration and flooding the market with supply. But this is a new day, and it's a new Chevron, a disciplined Chevron. Chevron CEO Mike Wirth, who might just be the best CEO in the industry, has repeatedly stated that the company will focus capital on shareholder returns, read buybacks and dividends, as part of a new disciplined strategy that forgoes the constant spending and drilling of the past. Simply put, the company is hearing the message loud and clear from those who are pressuring it for a lower carbon world. So CapEx is coming down, which puts a lid on exploration. For perspective on just how far CapEx is coming down, Chevron's CapEx was routinely in the $30 billion per year neighborhood for the first 5 years of this past decade. The company is guiding for annual CapEx to be between $14 billion and $16 billion through 2025. This creates a virtuous circle. By keeping a lid on exploration, this limits supply. And what do we know about supply and demand? Unless demand drops in tandem, less supply will raise prices. And that's kind of what's happened, except demand has actually been increasing of late. This has caused the price of oil to spike. We're coming up on $100 a barrel at this point. The drop in exploration, something that's been basically forced upon the industry by the powers that be, reduces costs, increases profitability, and allows for more capital to be sent back to shareholders. It's basically a Goldilocks scenario for investors, but less so for consumers. Buffett is undoubtedly aware of all of this. There's also the valuation. Warren Buffett is renowned for his investing acumen, especially as it relates to valuation. He very rarely overpays for a business, and I don't think he's getting a bad deal here either. Shares are trading hands for a price to cash flow ratio of 9.0. That's actually lower than the stock's own 5-year average price to cash flow ratio of 10.5. And this disconnect comes despite the fact that Chevron is arguably in a better position today than it's ever been, with healthy oil pricing and disciplined industry dynamics. The record free cash flow is evidence of that positioning. The Chevron of 2022 should probably be awarded a higher cash flow multiple than it's traditionally received, but they're getting a lower one. Again, what's not to like here? Chevron shares offer a yield that absolutely smashes what the market offers. It's a dividend aristocrat with 35 consecutive years of dividend increases. The growth is solid, and they're more worried about gushing cash than gushing oil, which creates a very favorable pricing environment. The stock has recently come to life after a long sleep, and the valuation isn't at all unreasonable. If anything, the stock still looks undervalued, even after a huge run. And the company stands to lose some negative press after engaging in lower carbon intensity. Now, Buffett doesn't buy stocks because he thinks they'll go up tomorrow. He invests in businesses because he thinks they'll do well over the long term. So keep that in mind here. If you're in it for the long term, and if your portfolio could use more exposure to oil and gas, this could be your opportunity to invest alongside Warren Buffett and scoop up shares in a 4.2% yielding dividend aristocrat. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about Warren Buffett buying more Chevron stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.